Back up at the top, the herd told us wasn't going to sell off AI, and all the other nonsense. We were slamming up into the trend lines of resistance. I talked about that in my last video. I'll link that at the end of this one, along with my latest Bitcoin video. Review the Bitcoin video for extra credit. A cheat sheet of where the NASDAQ is going. I got these sell signals back up at the top. I warned you that this was about to happen. And it did. We had that drop. We got the lower high. All the rest of it I talked about. Again, predicted a lower high. S&P, I predicted a higher high. They diverged and then called the top on the S&P that day. Confirmed the very next day on the 17th. It peaked on the 16th. NASDAQ here on the 10th. And I called the top on the 11th. These signals warned that it was going to happen. Still do what Bitcoin did and try to go higher towards the 20 period. Flip the cloud here. Rallying into bearish death cross. That's eventually coming on NASDAQ, by the way, but we're going to go back up and hit the highs first after we get one more dump. But again, bars with momentum here, still red. Even though we've had this powerful rally back up, I don't see any bottoming signals here. I see momentum. I say watch for a bottom signal here, but I don't see a bottom. Over here, I saw bottoming signals. Over here, we tried to get it right here with this rally, but it failed to be confirmed. They were unconfirmed signals. So again, if we've got a bottom, as the herd, is telling us, they told us the sell-off wasn't going to happen. We were dropping. They told us we were going to fall, into the abyss. We rallied back up, and now they're telling us it's over. Same people that never saw it are now proclaiming it's now over. I think so. I don't see my signals, which got it right. I don't see any bottoming signals. Do you? So I don't think it's over. I think we either again turn off of the 10 immediately. And even the momentum line is bearish. Now, Bitcoin got above the cloud. It got the momentum line turning back to bullish. Most of the trend signals with Bitcoin are still bearish. So again, could be we just get a larger counter trend towards the 20 period to try to fill this gap right here. Or it would take us up to the upper end of the cloud right here. Or we stall at the 10. I think you're going to stall at the 10 or 20 period on the daily chart for NASDAQ and S&P. So again, another reason why I don't think the bottom is in. I think you close below that 200 period here on NASDAQ daily chart. Signals are absolutely amazing. And again, when everybody was saying this couldn't happen, they warned of it. They turned off of resistance. Absolutely incredible signals. Now, this little circle here is warning of a short-term bottom with the previous Thursday's bar. So again, maybe we build upon that. Possible, but I'm looking for rejection around those gap fills. I'm looking for rejection at the 10 and 20 period moving averages there on the daily chart. We have a bearish alignment of the moving averages on NASDAQ, and then we just got it, the 10 and 20 below the 50, and we just got that now below the with the S&P. NASDAQ had already had it. Remember, the stock market is following Bitcoin. They're back to a positive correlation. Bitcoin got a bigger rally. We get a bigger rally into the 20 period moving averages. It's still under the 20 period, but it got a bigger rally. I don't see any bottoming signals. Do you? I had bottoming signals over here. I had topping signals over here. I had topping signals over here. I don't see any bottoming signals. I see, hey, look for a bottom. That's the circle. I see momentum, bottom. Okay, but there's no bottom signals. Bars are still red. So again, either you're going to turn off the 10 period moving average not seen here, or you're going to go try to rally to the 20 period towards that other gap. But I think if you do, you could do what Bitcoin's doing. It's forming a bear flag. Watch the video all the way through. I'll show you. Now, Bitcoin got a bigger rally, but it hasn't reached the 20 period. But it did get a big rally. We may still see NASDAQ try to play catch up and rally towards if Bitcoin can go. It's getting a death cross. Look at that on Saturday. Bitcoin trades every single day of the week, but on Saturday it got a death cross, a 50 cross below the 200, had a 29% drop. We rallied into it. We're forming a bear flag into that death cross. You've got the 20 period here. You've got the 100 above that, not seen on the chart. I don't have the 100 period here. 78.6 Fibonacci. If we try to rally into the 20 period, then it's possible that NASDAQ and S&P try to rally into that next gap and rally into the 20 period. We did already get above the 10. Maybe that is suggesting that NASDAQ gets above the 10 period moving average. You're going to get rejection at these moving averages. And here we have the 20 moving down to cross, moving towards to cross below the 50. The 10 has already done so, and now the 50 is crossing below the 200. Again, all a counter trend. And again, P500 rallies beyond the 10-period moving average. Our 61.8 Fibonacci is right there at the 20 and the 50-period moving average. 61.8 Fibonacci of this decline. So if we do like Bitcoin and get above the 10-period moving average, I'll be watching the 10 and the 20. And as we're getting a bearish crossover, 20 dropping below the 50 and a bearish realignment. And suggesting we're probably going to go towards the 200. Bearish arrangement of the moving averages. 61.8 Fibonacci at 54.53, right above the 20-period moving average. And this gap fill right at that same area. Get above the 10, I'll be watching these areas. And here's NASDAQ. Again, from this decline, the Fibonacci retracements, you've got your 10. If we stall there, we can go down. If we get a little higher, you get your 50% retracement just under the 20 period with our gap fill up here. So the 20 period near the 50% retracement for NASDAQ, the S&P 20 period near the 61.8 Fibonacci, our 61.8 Fib here is near our 50 period moving average. 20's crossed solidly below the 50. The bearish moving alignment of the moving averages, they're pointing down. 50's curling over. And do we get a bigger rally to the gaps or to the 20? I'm looking at the 10 and the 20. The 10 and 20 here on the NASDAQ. The 10 and 20 in the S&P is an area where we're going to get, in all likelihood, rejection, whether here at the 10 or whether here at the 20. And I think we move beyond this 200 and close below it. Do yourself a favor, watch the video all the way through so you know what's going on. Fed meeting on the 31st, I told you that, again, it was either going to be a continuation or bottom. We had already peaked and started to sell off. The Fed meetings are calling the tops, the bottoms, and the continuations of the trend. Again, we'll probably bottom out, and then the next Fed meeting could do the same thing, a continuation of the trend or a top if we bottom out and rebound back up going into the September meeting. These signals have been absolutely amazing. The Fed meetings have been calling the turns in the market. Predicted another top for Bitcoin at 70,000. It peaked 2 days before the Fed meeting. I was warning Bitcoin videos on those turns. And again, watch the video all the way through. You will see why the market is likely not bottomed, why the S&P is probably not topped yet. You'll see why we probably have not entered the bear market but are in a topping process, as I keep saying. If you like the charts and information, and you will, if you watch the video all the way through, please support the channel. I don't have any sponsors. I don't want to sell you stuff. All out there for free, but I need your help in order to make it work. So if you find this information useful, and you will, this video can change your life if you watch it all the way through. How many people could say that? I'll show you something absolutely amazing later in the video. But please support the channel. Follow the link below to take you to a secured site. You can donate any amount you want. Make it a recurring donation. If you do that, I thank you. But I need your help. Let me know that you want this information. This is stuff I look at every single day. I look at hundreds of charts a week. You don't even see half of what I look at. It's a lot of time to bring information, or it takes a lot of time and effort to bring you this information. Take a moment to help out. I need to hear from you in order to make it work. So please take a moment to support the channel. Thank you for your consideration for that. Now, I'm not only here to share with you incredible charts and indicators, and to try to do it in an entertaining and passionate way so I don't bore you to death. It's also my job to raise your IQ, and that's what I'm about to do right now. I'm going to do my Boy Scout good deed of the day and raise your IQ. This is the volatility for the S&P 500, the S&P volatility oscillator right here. Down here, I have the direction of the trend for the S&P 500. Right now, we are over here. And right now, I don't believe that the correction is done. I do think it's going to end. I do think we're going to bottom. I do believe the S&P is going to make a new high. I think NASDAQ has peaked. I'll share with you why. But this is measuring the volatility. When the stock market topped in January of 2022, immediately after that, we saw volatility rise and move sharply higher, moving above my signal line right here. And it remained above it consistently, except for right there. As volatility rose on the S&P 500, the trend direction went negative immediately after the S&P 500 peaked. immediately. After we bottomed, the trend direction turned back to positive. We've had corrective moves, okay? And as we've done that, we dropped back. When the trend direction changed, we saw volatility drop, and we moved back to the signal line. The corrections moved back to the signal line. We saw another rally, we moved back to the signal line. Saw another rally, we moved back to the signal line. This time we overthrew it. Bigger correction. That was in the summer of 2023. Then we dropped back below the signal line, and the advance continued. And let me just bring in the S&P 500. Now, again, as the S&P has been getting the pullbacks and the corrections in this run-up since the bottom, we've seen the move back up to the signal line over and over. And this was a bigger sell-off. And again, so we got above it, but then we dropped back below it. The advance resumed. And most recently, our previous sell-off, and again, back up to the signal line and pulling back. Right now, we're under the signal line. Even though volatility is rising, we're still under the signal line. Even though we have volatility and the market is dropping, again, volatility is rising, we're still under the signal line, and we're not moving into the negative region with the trend direction yet. And this is telling me, again, we're likely forming a topping process. And when the top happened over here, the S&P sold off, but then it went back up and it made a new high, and it formed a divergence on many indicators. Once that new high was in, we turned down off of the high. A few days later, we saw the volatility begin to spike up above the signal line. It remained there for the duration of the sell-off, except right there with the bigger rally that we had back up to the 200 period moving average. That was a rally in the summer at the time. It was a pretty powerful rally all the way back up to the 200 period moving average. But what saw happen is we saw the S&P peak. We saw it move to a new high, peak. We saw volatility as it began to turn down, then make a change in behavior and get back above the signal line, and volatility sharply rose. And as what happened is when that happened, the trend direction officially changed. And while volatility rose, the trend direction remained negative for the entire duration of the sell-off, and it wasn't until we got back into positive territory that it ended and volatility dropped. This is why I don't believe, one of the many reasons why I don't believe the S&P 500 has peaked yet, but I do believe NASDAQ has. I could be wrong about NASDAQ, but I have the guts to tell you exactly what I think. I think the S&P is going to go back up and make a new high once this sell-off is done. I think it's not over yet. We're going to get one more drop to the 200 or just beyond it at horizontal support. And then I think the S&P is going to go make a new high. I think NASDAQ is not. It's going to go back and fill the gap at 20,400. And they're going to diverge again, a larger divergence in the weekly time frame. We had one at the top recently here in the daily time frame. I think you'll see a larger one develop in the weekly time frame, and then I think you get the top, and I think this is suggesting that. This is also, just as they were surprised when I called the top on NASDAQ after it peaked, and then on S&P, I told you the very next one, we got that lower high. I said S&P's peaking, and then it was confirmed the very next day, the day after the top. NASDAQ peaked on the 16th. I told you we got confirmation on the 17th. Nailed it on both of them. Day after they peaked, my signals nailed it. Warned you was going to happen because of what was going on the weekly time frame, but because the market takes its time doing what it's going to do, people get lulled into a false sense of security and go, oh, it's not going to happen, and then does, and then they run around with their hair on fire. Crazy how emotional people get. Nevertheless, I digress. People are telling us. The people that never saw the crash coming now telling us it's over. They're celebrating with Kool and the Gang, good times. Celebrating good times with Kool and the Gang there. It's over. Well, I'm telling you, it's not over. And we're likely going to get another leg down. Then I think you're going to bottom, and then I think you're going to go higher. Unless the only thing that would change my mind, if all my signals began to turn back to bullish, then I would change my mind. But my signals with this rally back up remain bearish, so that tells me it's not over. This tells me it's probably not over either, because again, with every single major correction we've had, we've moved back up or beyond the signal line. We haven't done that yet. We're not near it. It will likely be that we'll get another sell-off that will take us up to the signal line or maybe just beyond it, and then we'll bottom, and then we'll see it come back down. We'll come back down, and a massive rally on the S&P 500 that will take us to new highs. Something like this that will form a divergence on many indicators, but because of the fact that the sell-off so far has not taken us back above the signal line, okay, tells me top is not yet being confirmed. Major correction in the cases here also tells me that, hey, maybe the sell-off is not over with because my signals, which are correct, remain bearish. Then probably going to move towards that signal line, and then you're going to get your bottom, and then we're going to turn back down. And I think that will create a bottom in the S&P 500. I think trend direction will turn back up and form a divergence as it did back over here, and a bullish divergence at the bottom back down over here. So that's what I think is going to happen. In the weekly time frame, we saw divergences form. On the S&P, we had a divergence on indicators like the RSI, divergences in the weekly time frame. But right here with the trend direction, we moved to a new high. There is no divergence. So it's likely going to be that we form one like we had back over here. And it's likely going to be that we get another sell-off. And once we reach this signal line or move just beyond it, you'll have a bottom. And then it will turn back down off as it's done in other times, turn back off the signal line, will likely go back up, make a new high in the S&P, and form a divergence like we did over here. Now, let me tell you one other thing. This is going to tell me exactly, confirm exactly when the top happens. I'll probably there are warning signs with the top, but this will confirm it a few days after, maybe a week, week and a half, 2 weeks or whatever, right after the market peaks. This will tell me. Will be validated when volatility stops dropping and rises back up and breaks this trend line right here. The takeaways here is that the sell-off right now, again, is a topping process. I keep saying it. It's not the bear market yet for the S&P. I think NASDAQ's already started it. I think NASDAQ has peaked. It's going back up to Tesla highs. Under them at 20,400. I think we'll overthrow that level and it'll top. Takeaway here is that, first of all, market is likely not topped yet for the S&P. Second of all, the correction is probably not done yet, the S&P 500, on volatility and the direction of the trend. Corrections have come back down here. We're into negative territory. We don't have that yet. So again, going to be looking for a bigger sell-off, probably around the 200 period moving average. I think you'll get a bottom. I think you get a rally to a new high. Then I think you get your top like you had over here in 2022, but this time it won't be a correction. This time it will be the top for the market. Not see new highs in the stock market for probably years. At least that's what the valuations are telling us, that again, that the valuations are so high. Valuations tell us, like the Buffett indicator and the Shiller PE ratio, these are valuations that tell us the market is extremely overvalued, and there has to come back to a repricing of fair value or undervalue is what the valuations tell us at extremes. It tells us that for the next 10 over the next 10 years that we're going to have a bear market or two, a crash or two. Returns will be low or negative. That's what it's telling us. In 2000, you peaked, you had a crash, you rallied back up to the high, and then you crashed again, and we went nowhere for 13 years. That's what the valuations are telling us. I'm gathering information here, looking at volatility, the volatility oscillator here, the trend direction here. It's telling me two bits of information, and that is that the top is likely not in on S&P. Secondly, 3 bits, the top is not in. The bear market has not yet started. Volatility is not above the signal line yet, and we've not dropped into negative territory with the trend direction yet. Telling me it was likely not in on S&P. It's telling me that the bear market has not yet started with this sell-off on the S&P, and it's also telling me that the correction is probably not done yet on the S&P. Are you picking up what I'm throwing down? Information you're not going to get anywhere else. Live it, love it, learn it. Into this, look. The S&P 500, my signals, as you can clearly see, remain bearish. Over here at the top, we peaked right here. I told you, right on that day, we were getting a divergence. We were above the upper boundary of the Bollinger Band, and we were diverging with the S&P that slammed into the 78.6 Fibonacci, and I told you that was likely the top. Told you we need to close below the upper Bollinger Band. See my signals turn bearish. My signals turn bearish the very next day. Momentum, and here with the reversal of conditions, we got the red bar, and then it was validated here 2 days later with the reversal of conditions. You see the red bar first, then the red bar was followed by the red cloud and led to this decline. Now, I've made it no secret. I think we're going down here. I think we're going to bottom, and then I think we're going to go make a new high. That's what I think is going to happen. Again, I got the guts to tell you exactly what I think. Change my mind? Somebody asked me, what would change your mind about this rally and about this being a bottom? Well, if all my signals begin to turn back to bullish. But as you're rallying up into declining moving averages, you're getting a bearish alignment of the moving averages. You're getting a tangling. Okay, the 10 has already dropped below the 50. The 20 is now dropping below the 50. That's a bearish realignment of my moving average trio. I call the 10, 20, and 50 the moving average trio. I have my moving averages the same color in every single time frame. It helps me. The 10 is red, the blue is the 20, and the green is the 50. So it helps me. And we're going to be talking about those, and that's why I'm telling you what the colors are. Down here I have the 200. It's always black. I think that's where we're moving. And that's in the low 5,000 area right now, 5,032. Horizontal support 49.53. I think you're going to find support in here. I think we're going to either turn off of the gap fill here in the 10 period or come up here to the gap fill area or just under the gap fill at this low here, or maybe gap resistance moving closer to the 20 period moving average. I think, again, as I've been saying, I told you I thought we'd get a rally back up. I told you watch the gaps, watch the moving averages. Don't think that this is the bottom. I told you to watch for rally. We got it. So here we are at the 10 period, getting a green bar. If the green bar, now let me just say this, the VIX for the Thursday session is predicting a down day for Monday. It could be wrong. There's still a 15% chance it fails. But the Friday session, we also had a drop on the VIX of greater than 10%, another 14% drop. I talked about it in my last video. So if the signal fails and we continue to rally towards the 20 period, towards the red dots of resistance, towards the other gap fill, the other signal could still play out and we get a sell-off on Tuesday, and maybe we get a sell-off with the inflation data. That's what it would be suggesting if the signal failed on Monday. And again, no indicator is perfect. I'm just telling you there's an 85% chance of it. There's also a 15% chance that we have, that the S&P has a down day percent chance on Monday, as well as on Tuesday. Signal fails on Monday, we rally, the Tuesday signal can still play out. That's what I'm trying to tell you. I talked about that at the beginning of my last update. Look, the cloud is red, the bars are red. We're rallying into filling the gap, we're rallying into declining moving averages as they get a bearish arrangement of the moving averages. But we've now rallied after 1, 2, 3, 4, 5 days. So we bottomed out, we rallied up all 5 days there. With one down day in the midweek there, but we rallied up and recovered the loss. Okay? And now the herd is telling us, oh, it's over, it's over. They told us it wasn't going to happen, are now telling us, oh, it's over. The people that finally started being bearish here and here and telling us, oh, we're going to crash, and now they've decided it's over. You see, and they get very emotional. Usually say things after it already happens, but it's not over. Okay, and the thing that would change my mind is if my signals all began to turn back to bullish. You can clearly see my signals, which are correct, are still bearish. I think you're going to get a dump here at the 10, or overthrow it and go up to here to gap resistance, or this gap resistance area here, or maybe this low end of this bar, and move closer to the 20 period if we don't get an immediate rejection. Now we could just turn off the 10 period and start selling off. But if we rally further, you still have that 20 period, you still have the gap resistance, you still have this other gap to contend with. I don't know that we go back and fill the gap up here. I think it's at 24.43 or 47, something like that. I talked about in my last video. I don't have it marked on this chart. I think we're going to get rejection here, and I don't know that we get above the cloud. And if we go up there to try to fill the gap, you're going to be making an attempt to fill the cloud. I think we're going to rally up here a little bit more probably, and then get a dump. And then again, if you get another green bar, you could rally further, and then you could get the sell-off, the CPI sell-off, and then we'll be watching. Do we go to a new low on the awesome oscillator, or do we get a higher low and form a bullish divergence? My guess is you're probably going to form a divergence, and you're going to go probably either get rejection here at the 10 or go a little bit higher, and then you're going to come down here, and you're probably going to find support at that 200 period or just beyond it. But my guess is you're going to take out this low here, and then you're going to bottom down here. Currently, the 200's at 5,032. And then again, the horizontal support is at 49.53. That's where I think we bottom out. Then I think the S&P is going to rally up to a new high. in all likelihood. See this gap up here? It never got filled. And that has caused me to believe that the S&P is likely going to diverge with NASDAQ in the weekly time frame. The S&P will go make a new high. If you watch this video all the way through, you'll see why I think that. And you'll know all along a pretty good idea with the next rally. I'll show you the indicator that I'm about to show you and volatility, trend direction of the S&P 500. And it's going to tell us right when the top is happening. It will validate it a few days after the top happens. Now, if we get the sell-off immediately, maybe we get more red bars, maybe we get green bars, and we still sell off and we get a divergence. I think histogram on the MACD will turn back down. Okay, maybe you get another up day, or maybe you go up here, you get a topping tail. Maybe you come up here and you get a topping tail and you get a complete reversal, and then we start collapsing with the inflation data. Oh, it's supposed to be good data. Well, it was good data back over here when we got the top on NASDAQ. We peaked right there and we got a 500-point drop on good data. Quickly, let me just say this. As we're rallying back up into the 10 period, you've got the momentum cloud there. We're stalling there. You've got the gap fill. You've got these levels I talked about. But I think you're coming down here, and then I think you're going to bottom. And again, if we go a little bit higher, the RSI can come up here to the center line and then turn over and form a really nice looking divergence. You may recall that upper Bollinger Band, not seen on this chart, and I told you I was getting all kinds of sell signals here. I hit the 78.6 Fibonacci. We it formed this divergence, and this happened. So I don't think it's done yet. But if you look at this move right here, it's doing what Bitcoin is doing right now, forming a bear flag, rallying into the moving averages. Bitcoin has rallied into the 50-period moving average up here. Maybe the S&P joins it and gets closer to it anyways and completes the bear flag that I'm talking about. And I talked about that in great length and detail in my last video. I'll show you briefly here. Here you can see it on the 30-minute chart. If we go a little higher towards the 20 period, towards this other gap, the gap fills way up here at the close. But if we go towards the intraday, we'll hit that 200 in the 30-minute time frame here. We'll hit this upper boundary. You have a really nice looking bear flag pattern. I think that's very possible if we clear this level on the 10-period moving average. Look at the 60-minute chart. I showed you the 30. Usually I don't show you the 30. This thing should be hanging in a museum. This is a beautiful, beautiful chart. Here it is on the 60-minute chart. I talked about the MACD possibly forming a larger divergence, eventually coming down. But I told you we have this little rising wedge in the more recent price action. Again, this is probably a counter trend here. And then again, if we do go higher than this upper boundary here and don't turn off the 10 period immediately after filling our gap at 53.45, then again, you can hit this upper boundary right here. And maybe that, I've just drawn a parallel line with the lower boundary. Maybe that takes us to gap resistance. Maybe it takes us just up here, not to the gap fill of 54.47, but just at the low there, which sometimes that's the case. And if we do, you'd be slamming right into that level, and then if we start getting an inflation sell-off or something like that, or even concerns about recession or whatever the catalyst may be, tensions in the Middle East, whatever the catalyst may be, get another dump and bottom out. But I'm watching to see, do bear flags. We had a little miniature bear flag here. It didn't play out. That MACD didn't roll over with it. We talked about that at the time. A gap higher, we got a gap and go. This was a gap and trap. And now you've got a possible rising wedge or a possible larger bear flag that may develop if we continue to rally into the next gap higher, or attempt to do it, rally into gap resistance and rally in towards the 20 and the 50 in the daily time frame. Are you picking up what I am throwing down? NASDAQ weekly chart, we're down just above the 50. I think we're going to overthrow it. Then I think we're going to rally back up to fill the gap at 20,400, probably overthrow that level, rallying back up towards the red dots, towards the upper boundary of the cloud here. And guess as NASDAQ is going to put in a lower high. But I think you're going to bottom, and I think it's going to be up to 17,000 area. At this level, as I said, or this level, again, the peak over in 2021, the 16,700 area. This is where I think we're going to find a bottom with NASDAQ. This is the weekly chart. Now, same thing. You know, NASDAQ actually closed positive. S&P just rallied up to that thing. We actually went higher. Again, we stalled at the 10 period here in the daily time frame. You've got the 20 directly overhead, the 50s up here. I think you're going to see a close below the 200. I think you're coming back to this level. This is, again, that 16 16,000, high 16,000 area. The peak from 2021 is just below this at the 16,700. This is the 16,900 area. So I think you're going to find a bottom in this area somewhere between 16,700 and 17,300. I think you'll get a close, take out this low, and I think you'll end up forming a divergence down here on the awesome oscillator. But the green bar, if maybe it turns red and we just start turning off the 10. Okay, if it turns right back to red or remains green and we just start dropping, again, you could see green bars and then fall by red and form a divergence. Stall here. I told you, watch these gaps, watch these moving averages. This is where we're headed. I told you to expect a rally. Expect a rally is going to fail and we're going to go down and make a new low, and then you're going to bottom out. So the question is, are we going to stall here at the 10 at this gap fill? Actually, I did that wrong. Just under that, this gap fill here that we already filled this past week. Are we going to come up and try to fill this gap right here? Talked about on the NASDAQ as well. Again, moving towards the red dots, the upper boundary of the cloud, moving towards the 20 period moving average, which is blue. Again, we may just hit the low of that session and just move a little bit higher in turn, but I think you're going to try to get a rally. If you get more green bars, if you get rejection here, then again, all bets are off, regardless of which way it plays out, whether the 10 or the 20 period, whether this gap or this gap. I think you're going to get rejection here. My signals, as you can clearly see, remain bearish. You got a green bar, so can we get a bigger rally? But then that's going to be followed by a drop to form maybe a divergence to create a bottom. My guess is that's probably going to be the case. I think once you get closes under the 200, you'll see a bottom form. I think the shorts will close, take profits, flip the trade. The buy the dip crowd comes in. I think you will establish a bottom, and then I think that the institutions will stop selling and let it go back up so they can sell back up at top dollar. NASDAQ's already dropped nearly 16%. It's probably going to drop a little bit more, closer to the 20% level. Maybe we don't reach it, maybe we do, and then they're going to likely have a bottom, allow a bottom to be created. I think the institutions are probably going to allow that. Keep selling and bust that level of support, all bets are off, but you've got major support there in the high 16, low 17,000 area. We have a rising wedge, just like on S&P. Again, you got one in the more recent price action here as well, but if you connect the peaks over here, you got this larger rising wedge, and that may be all she wrote if we get rejection at these 10 period moving averages. But if you can try to climb higher to again, this low end area or towards this downward trend line right here on NASDAQ, if you could try to climb towards that 20 period moving average to fill this gap, or at least attempt to do it, again, you've got a fairly nice looking bear flag pattern that is to get another push higher, going towards a 100 period moving average on Bitcoin, going towards the 78.6 Fibonacci. We halted at the 61.8 Fibonacci. If you do that, then maybe, again, this thing's not done yet, but you're forming a bear flag on Bitcoin. You got a possible bear flag on the S&P and the NASDAQ. Bitcoin may try to still bounce off this level right here. We're pushing into it and trying to bounce. It looks like slightly violating it there. But again, it may not be done yet, and then you can go down or go a little higher towards 64, 65,000, 100 periods at 64,000, 250. The 65,000 area is where 0.6 Fibonacci might go into the golden pocket here and then see it turn. And if Bitcoin ends up doing this, the market will likely do it as well. So don't be surprised. I'm telling you, we might push up into those 20 periods in the daily time frame here on the NASDAQ, closer to them. Maybe not reach it, maybe not reach the upper boundary of the cloud or the red dots, but move towards them. And if we get above the 10 period, you could turn off the 10, but I'm looking for rejection in this area, and then again a close below the 200 and a move to the 17,000 or the high 16,000 area. The green bars on the awesome oscillator suggest that we get a bigger rally towards the next gap, towards the 20 period. Maybe we'll see what happens, but I told you I'm looking for this rally, and then I'm looking for it to fail in this area here. As I told you over here, we were going to rally into gap resistance, which was the neckline of the head and shoulders pattern. I told you that at the time. What happened? We rallied right into the neckline and reversed, which is what I told you was going to happen. And I told you these are the levels that I'm watching here. Ultimately, I think we take out that 200 period moving average. Again, We don't have to rally further. I'm just trying to tell you we could, but if we get rejection off the 10, we can start the ball rolling down, but we could try to gravitate towards those 20-period moving averages and towards the gap resistance levels on those intraday charts, that we fill the gap up here on NASDAQ, but maybe so you can form bear flags on S&P and NASDAQ. Using wedges now, if we push higher, it could evolve into bear flag patterns on those 60-minute charts.